Hi, and welcome to the Banker's View from Sibos video series, filmed here on location in Toronto. I'm Joy Macknight, Technology Editor at The Banker, and I'm here with Ken Wong, who is Head of Payment Strategy and Innovation at TD Bank. Ken, thanks so much for joining us today. Can you tell me what you think are the main themes here at Sibos this year?
Well, the main themes are basically building for the future. I mean, looking at what our clients in the future and really giving them value. But more than that, too, what value means not just from a product perspective, but also from a trust and security perspective. So we've heard all about the cybersecurity and all the problems that are happening. So we are looking at that aspect of things too. Again, to build trust in the community and to our clients.
Okay, what would you say are the main challenges in correspondent banking today?
Okay. Other than the usual stuff like cybersecurity, settlements, liquidity, and whatnot, personal view is the biggest challenge right now is actually more from a branding perspective. FinTech has given correspondent banking a really bad name, saying it's slow, it's expensive. But what we as correspondent bankers don't do is tout what we're good at and what only we can do. We are the only network of banks who can actually give ubiquity of the actual payment itself, of which no FinTech can. And in fact, all FinTech rely on banks actually to actually fulfill their payments itself. So my thought is, if we as banks can educate the general public, say why we're here, why we're good at things. Yes, we might not be as fast as a FinTech claim to be, but we're here because we are secure and we can actually get any payment end to end.
Okay, and I know, the correspondent banking world is changing, and SWIFT is playing a role in that with the Global Payments Innovation Initiative. How do you see that progressing, and what is TD's role in that?
Right. So TD was one of the first banks back in 2015 to say, this is great, and we actually signed up right there and then. What it does is basically, as I said, looking to what the client wants. What does the client want? Track and trace. He wants certainty of the payment. So yes, the FinTech kind of led us there, but we are the ones who can build it, and I think we're building towards that, to give value to our clients. But then we don't stop there. We go beyond and say, what are the other challenges our clients are having, especially from a corporate perspective? Data. We can't move data through normal fin messaging right now as much. So what GPI is doing is saying, how can I move big amounts of data with the payment or disconnected payment, but as part of the payment to my client at the end? And look from a risk perspective, what we're doing is stop and recall. Today, when we look at fraud, a client comes to me and says, oh, please stop that payment because something's happened, someone's broken my systems. Banks, they have to go bank to bank to bank to bank to actually stop the payment itself. But with SWIFT GPI, we can actually try and stop it by the network. So it's bringing, again, more functionality for our clients, more security for our clients, and keeping, I guess, our clients in top of mind to say what they need, again, both from a product and from a trust perspective.
Okay, you've obviously talked a lot about FinTech and sort of this disruptive element, but what should the industry really be doing, the banking industry, in terms of working with them to maybe reinvent correspondent banking?
Right. Well, first thing I'll say is FinTech woke the banks up, saying you can do things better, which I totally agree. And so with things like GPI, we are making things better. Where I think banks need help with the FinTech is basically the speed of delivery, both from an infrastructure perspective and also from a client-facing perspective, right? And what I also believe is, the whole PSD2 model where there's API banking and the distribution channel is given to the FinTech, right? So let the banks, or rather, banks can distribute their products through these portals that FinTechs are building and reach actually greater reach than through their own portals. Okay,
but what would you say really is the future of correspondent banking? Because there has been a lot of discussion, whether it's blockchain, whether it's the FinTechs, there's all this disruptive elements. How do you see the future?
I think it's very interesting right now, and this is whole things that a lot of banks we are talking among themselves about. It's about the last mile. It's not about the technology. It's not about whether you're a FinTech or not. It's what do our clients want and how do I reach the last mile. So one thing I always say is, what is correspondent banking? Nowhere in the definition of correspondent banking does it say, I have to move things through RTGS and it's Swift-based. To me, correspondent banking is helping my client's client deliver to their client's client, right? So should we be able to move things through, say, cash delivery? Can we move things from an account to a wallet? Do we move things through the low value systems of another country, right? Or into our own country if I'm providing the service to someone else. So it's basically opening up the possibilities for my FI client on the other side to service their clients and not box what their clients can actually do to deliver to their clients. I know it's a bit confusing, I'm using the word client a lot, but it's really about the end-to-end chain. Whereas correspondent banking today kind of only stops at a certain point, but doesn't give optionality to where the beneficiary actually wants the money.
Okay. All right, well, thank you so much for your insights, Ken.